All right, guys, in today's video, we're going to be talking about the vertical distribution. I've got a bunch of shorts on this and I think a few videos as well. But this is a pattern that you see very often. So you guys really want to learn this pattern. And basically what you're looking for, this can be done on any time frame, but typically you want to look for this on a 1 minute if you guys are scalping futures. And what it looks like is basically when you're trending in one direction, but you're trending in a bit of a choppy manner, where the trend keeps pulling back to retest your short-term moving averages. Now, typically the moving averages that I like to use are the 8 for the aggressive traders and the 24 for more of the passive kind of pullback traders. If you watch my 8 and 24 video, I refer to these as aggressive and responsive. So the teal line here, that's the ADMA, and the 24 is the orange line. So typically what you will see during a vertical chop is at the start of the trend, when it starts to get very aggressive, it will hold on to that ADMA nearly the entire time. And then once it starts to get a little bit choppier, you will start to lose that ADMA and start to pull back to that 24 EMA, but it will protect that 24. They will not allow it to trade a lot of delta or a lot of price action below that 24 EMA. And these can go on for a very long time. They can go on the entire day in some instances. So basically what we look for is as long as that 24 EMA, that orange line here, is being protected, you really want to hold back from shorting because it will give you a lot of short opportunities. It will give you these patterns that typically you do like to short, but they will just continue to fail. It will give you sweeps. It will give you bear divs, whatever you like to look for, rollover tops, right? And they'll just continue to fail. So typically what you want to wait for is a significant shift in delta, usually a lot of bearish delta coming in, major bearish clusters, maybe if you have a lot of trapped buyer delta on the high, kind of like what we had today. There wasn't a ton, but there was maybe 1,000 contracts trapped on that high. And then realistically, what you want to look for is when that 24 EMA starts to curl over. So we start to see that curl to the downside on that 24. If you like to trade moving average crossovers, I'm not a big moving average crossover guy, but you could also look for when the ADMA is losing the 24 EMA. And typically what will happen is that 24 EMA will curl over. You'll start to put in lower highs below that 24 EMA, and then you'll start to nuke down towards VWAP. Okay,